It's Wednesday, the 8th of May, 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 big stories to get through today in 5 minutes. Let's get cracking. Story number 1, the Reserve Bank Board yesterday left the benchmark cash rate at 4.35%, and it also sharply revised upwards its inflation forecast, warning that the pace of price growth just isn't falling as fast as hoped.
The board expects that it will be some time before inflation is sustainably in the 2 to 3% target range, and it wants to remain vigilant to upside risks. That means the bank isn't ruling anything in or out. For most of us folk with a mortgage, it means we'll keep paying these 12-year high interest rates for the foreseeable future, and economists reckon it will be for at least the rest of this year. One takeaway from yesterday, though, was that the central bank board's statement wasn't quite as hawkish or downbeat on getting inflation under control as some expected. It kept to its neutral tone in the statement released after the board meeting. Governor Michelle Bullock was perhaps a little bit more aggressive in the press conference, but that's kind of good.
Just on inflation, Sean, what is the central bank saying about it?
Well, it thinks that the consumer price index will come in at 3.8% for the year to the end of June. Previously, it thought it was 3.3%. Stuff like rent, insurance, education, they're just staying higher than what the Reserve Bank had hoped. They're also stuff that you have to pay. It also provided a bunch of other economic forecasts, downgraded growth slightly, improved the unemployment forecast slightly as well. The Reserve Bank really wants to be confident that inflation is moving sustainably towards its target range. Stuff like next week's budget, the Fair Work Commission decision on wages, those things become even more interesting now. Bottom line, though, according to the market economists, no change in rates for the rest of this year.
All right, on to story number 2 now. ANZ yesterday joined NAB and Westpac in announcing a share buyback scheme, this time worth $2 billion. It came after the Melbourne-based bank reported a 7% slide in net profit to $3.55 billion for the 6 months to March.
Like the other 2 banks before it, ANZ felt the pressure of competition in the retail banking business, which includes mortgages. The result, though, was in line with analyst expectations. The group will pay a slightly higher dividend. CEO Shane Elliott said the economy and individuals are being resilient and prudent with their money. The bank's all-important net interest margins, the difference between what it receives on loans and pays out on deposits, shrank slightly. Mr. Elliott said competition in the housing market remains hot. ANZ's share price closed slightly higher, helped by that Reserve Bank decision. It now means that ANZ, National Australia Bank and Westpac have announced $4.5 billion in share buybacks. It puts money into shareholders' pocket. I think that's good use of the money. I'm not so sure, though.
Sean, story number 3, Macquarie's chief executive, Shamara Wickramaniyaka, expects investments in data centres will drive big returns for the asset manager as the world's big tech companies consume more information to feed artificial intelligence applications.
Data centres require huge amounts of energy and capital to drive business development strategies while keeping up with consumers' increased household consumption, Ms. Wickramaniyaka said at an investor conference yesterday, and Macquarie wants to take advantage. She said tech is going to impact every other sector of the economy over the next little while, particularly data and clean energy, and that's where Macquarie is thinking about putting its money.
Story number 4, the likelihood of Bonza flying again is diminishing, with a federal court hearing to set up a creditors meeting being told that the lessors of 6 aircraft have clearly expressed their intention to remove the planes from Australia.
James Hutton, SC for administrators Hall Chadwick and Bonza Aviation, said 6 Boeing 737s are not part of the administration due to the fact that their leases were terminated the day before Hall Chadwick was appointed, according to a report in The Australian. The aircraft are not in the administrator's possession, and the lessors, AIP Capital, have clearly expressed their intention to take the aircraft out of Australia. Almost 58,000 customers, along with 323 staff and 120 trade creditors, are owed money by Bonza. Mr. Hutton said the reason that Bonza administration is different to Virgin Australia is because that airline was able to continue trading, not the case with Bonza.
Last one, story number 5, the judge overseeing Donald Trump's Manhattan hush money trial threatened to jail the former president if he continued to harass witnesses and jurors after concluding that fines have failed to deter the defendant from repeatedly violating a court-imposed gag order.
Justice Juan Merchant issued the final warning as he found Trump in criminal contempt for the 10th time over comments made online and to the media. The presumptive Republican nominee has been fined $10,000, $1,000 per violation, which is the maximum financial penalty allowed by New York state law. Justice Merchant said the state will have to consider a jail sanction, though it was the last thing he wants to do. Defendants held in criminal contempt can go to jail for 30 days, according to the Financial Times. However, what about the constitutional questions that would raise? And I'm not quite sure where the Secret Service detail would be during that period. Anyway.
That's a very, very good question. There we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 8th of March, 2024. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. And every Wednesday, there's a new episode of our sister podcast, How Do They Afford That?, which is all about making your money work a little bit harder for you. I'll put a link in today's show notes. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.